Welcome to ForexTV.com. Today's June 16th. I'm Tim Kelly with your New York Forex Market Buzz. The euro has risen against the dollar in New York trading today, bouncing back from near-term low as dollar traders have expressed caution ahead of next week's Federal Reserve interest rate decision. Now for a quick look at the headlines. Industrial production continued to decrease in the month of May, according to a report released by the Federal Reserve this morning, with production falling by a little more than economists had been anticipating. The report showed that industrial production fell 1.1% in May, following a revised 0.7% decrease in April. Also this morning, the Producer Price Index showed wholesale prices rose much less than expected last month, easing concerns that inflation pressures would force authorities to back off their stimulus efforts to keep prices in check. The overall PPI eased to 0.2% gain after rising 0.3% in April. Today we're joined by Esiner of Travelex Global Business Payments. Hi Omer, thanks for joining us.
Thanks for having me.
Omer, we've seen a lot of volatility in the stock markets over the past couple of days, and that has also led to some currency fluctuations. We had a little bit of fundamental data out this morning, more than a little bit, as I read in the preliminary statements here. What are your thoughts on this volatility in the stock market? We'll start there because I think that's the driver right now.
Yeah, I think we tend to see, increased volatility anytime we get towards an end of a aggressive move. And I think if we look at the move in equities since early March to about just about a week and a half ago, it has been quite impressive. In fact, I think the Dow is up close to 40% over that time period. So clearly, I think the market is running out of a little bit of steam. It is looking a little bit top-heavy at these levels. And if you just take a quick look at the chart, we have kind of sputtered around the top of the range right now in the Dow. And so I think it's not too big of a surprise to see a little bit of volatility here as investors try to decide which way this thing is going to go. Again, I have noted that stocks are up sharply since their low in early March. So I do think that we are poised for a little bit of a pullback, and I think what we're seeing here is basically the market laying the groundwork for that pullback.
Omer, the market has been helped with some. You and I discussed this before the interview. Some statements from Russian officials, Medvedev and his finance minister, and there seems to be a little flip-flopping. First, Medvedev comes out and suggests that the dollar be replaced as or augmented as the global reserve currency. His finance minister coming out saying that there's full faith and confidence in the dollar. And then last night at the BRICS summit, he suggested that and maybe clarified his statement that there needs to be perhaps an additional reserve currency. What do you make of the rhetoric coming out of the BRICS summit?
Well, clearly some mixed signals on the part of the Russians, as you mentioned. First we got some support for the dollar from Russia's finance minister, and then, as you mentioned, overnight, Russia's president calling for alternatives to the dollar as a reserve currency. So, I think I don't want to read too much into the comments. I will say that, I think that the fact that we are getting these kind of confusing comments highlights the difficulty that a lot of these reserve nations are facing right now. On one hand, they're the largest holders of U.S. dollar-denominated assets, so they can't simply abandon their U.S. dollar holdings. I think that would cause a run on the dollar, and it would basically undermine the very value of the assets that they're trying to protect. On the other hand, they are growing increasingly nervous with Washington's historic spending spree, with the ultra-accommodative policies of the Federal Reserve and the potential for all of this to lead to hyperinflation. So, I think they're stuck between a rock and a hard place in many respects, and I think what we're seeing is kind of, just highlighting the difficult nature of the situation that they're in. Just to kind of step back from it all, though, I think that the dollar is likely to remain the reserve currency for the world for the foreseeable future. I don't think there's any alternative to a dollar. I don't think commodities are a viable alternative as a reserve instrument. And I think what we are seeing is that, as you mentioned, rhetoric and basically posturing. I think we're going to continue to see that from reserve countries as they kind of remind Washington to keep their spending in check. And at the same time, I think we need to look at actions rather than words. And if we do that, we see that these nations, China, Russia, and India, are still very active buyers of U.S. assets. And we just need to look at last week's Treasury auctions for evidence of that. So, on one hand, I think it's rhetoric. I think it's a little bit of posturing, but it does certainly highlight the difficult situation that a lot of America's, reserve nations are in right now.
Omer, the fundamentals and the rhetoric are kind of a volatile mixture for the currency markets, because on the majors at least, we're at some pretty critical technical levels as well. We're at the 200-day moving average on a number of our major pairs here. Let's start with euro dollar. What are your thoughts there? A lot of folks that I talk to say that euro is poised for a significant pullback, maybe not a major pullback, but certainly significant. What's your thought there?
Yeah, I'd have to agree with that. I think, a lot of the run-up in the euro that we saw since early March has been the result of U.S. dollar weakness, not necessarily euro strength. There's really little fundamental basis, I think, for the euro to be trading in the 140s. We are below 140, for the last two sessions, but still very close to it. So, I do think when we take a step back and look at the broader situation, we see that Europe's economies are likely to lag the rest of the industrialized world in a recovery. I think we only need to look at data earlier this week out of the Eurozone, which showed a record rise in first quarter unemployment in the Eurozone. So I think that kind of news has reminded the market that the Eurozone economy is likely to lag. I think it suggests that there's really no fundamental reason for the euro to be trading at these levels. And so I think that does set up for a pretty sizable pullback in the euro against the dollar.
Yeah, it's been a little bit volatile. Just doing a check here at 138.36, still up on the day against the dollar. But I want to shift focus over to cable. It has been pretty resilient as of late. You see a different picture in the UK?
A slightly different picture in the UK. I think, if we look at some of the policies of the Bank of England earlier on in the crisis, they initially led the pound to weaken. I'm, of course, referring to the Bank of England's slashing of interest rates and its eventual adaptation of quantitative easing. I think those policies are now coming back to really reward the pound. I think we are seeing some more concrete signs of stabilization in the UK economy, and I think that should lead the pound to outperform the euro, certainly, and in the event of a dollar rally, probably see its downside more limited. I think, I would also add that the pound has drawn some support from a broad kind of stabilization in the financial sector, and I think it'll continue to draw support from further signs of stabilization in its banking sector.
Omer, one of the things that caught my attention was when there was some calls for Gordon Brown's ouster last week. The pound did not flinch, relatively speaking, and that. What do you make of that in terms of strength of the pound?
Yeah, I think that we did see a little bit of a pullback in the pound at the kind of the height of the political uncertainty in the UK, and I think the fact that at least for now, Mr. Brown has been able to kind of ease some of those concerns by winning over the support of his Labour Party ministers. I think that has helped to ease concerns over political uncertainty, and that's, I think, why we're seeing the pound remain towards its upper range against the dollar and really at fresh highs for the year against most of its other major counterparts. Having said that, I do think if we see an escalation in that scandal in the UK and the potential for increased political uncertainty, then I do think the pound's upside will certainly become much more limited, and we could see that add to kind of a reason to book some profits on its recent run-up.
Omer, what do you foresee as the event risk for this week? Just in closing, what's on your mind as you look ahead to the middle and end of the week?
Well, kind of light on data. We do have CPI due out tomorrow. That wasn't much of, PPI wasn't much of a market mover today. So I kind of question how much the market's going to be focused on CPI. Having said that, though, if we do get some kind of significantly deflationary number in the CPI, I think that could certainly rekindle some of the risk aversion that we've seen benefit the dollar, and I do think the dollar would probably trade a little bit higher on that news. Other than that, I think equities are going to be the name of the game. If we do continue to see stocks under pressure, if we see further pullback on Wall Street, then I would expect that to coincide with a stronger dollar heading into the weekend.
Okay, Omer, thanks as always. Thanks for joining us today.
Thanks for having me, Tim.
This has been your New York Forex Market Buzz with Omer Esiner of Travelex. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.